Hi, this is Dickinson, and I'm coming to you today from the city of Toronto in Canada. And I wanted to take a few minutes to sort of follow up on a post from a couple of weeks ago about the impact of Donald Trump's proposed tariffs on Canada and Mexico and the United States, and to try to sort of explore some of the reasoning behind the tariffs and some of the implications that they'll have if they're actually enacted. Now, as I'm filming this, tariffs have been put on hold on a temporary basis. They were initially planned for February 1st. That's now been kicked back to March 1st, but it remains to be seen exactly what happens in terms of the Trump administration's approach to imposing tariffs on its closest allies and largest trading partners. I think that what we're seeing here can be connected to a larger series of global trends. And one of the things that I've talked about in other videos that other observers are sort of remarking on is that as the global demographic reality changes, as the population ages and shrinks in many parts of the world, this is upending the traditional globalized way in which industry and supply chains function. And so we think, for example, of the declining population in China and how that sort of makes it very difficult to maintain cheap manufacturing as the core of your economic plan or policy. And so the kind of manufacturing that flowed into China over the last 20 or 30 years may well flow out of China into other jurisdictions. And this is true when we look at all sorts of places around the world. Germany is this traditional center of manufacturing and the petrochemical industry and these sorts of things, now kind of seeing that its population structure can't support those industries, and so those companies are flowing out to other jurisdictions. This coincides with the decline in global trade levels overall, that globalization, in a sense, has been a fading force since 2016. Global trade levels have been declining since 2008. And overall, there's this sense that there may be a bit of reshoring going on, that companies, that manufacturers are kind of sheltering back in traditional spaces, moving out of those globalized structures, especially as supply chains become more vulnerable with increasing chaos and conflict around the world. And so we see the emergence of regional trading blocs versus this single monolithic globalized system. One of the beneficiaries of that process is probably North America, in the sense that all of that manufacturing that had been globalized over the course of the last 20 or 30 years starts to come home. And in fact, we can look at data like the value of building permits that have been issued in the United States for new manufacturing facilities over the last couple of years. And we can see that in the final years of the Biden administration, those numbers just go absolutely through the roof. Those facilities have not yet been built or completed. The jobs associated with them have not yet arrived. But the building permit data itself suggests perhaps the largest boom in manufacturing investment in American history. Now this is the opportunity for the Trump administration to kind of build on and capitalize on that. And it may be that one of the strategies underlying this discussion of tariffs is to ensure that as that investment flows back into North America, that as much of it as possible comes to the United States and not Mexico or Canada. Now, this is a bit of a reversal of the American position, which had been trying to build this kind of integrated North American economy for the last few decades, where Mexico and Canada basically worked to develop and promote American industry. Trump's approach seems to be that these tariffs might be a way to kind of ensure that America eats Mexico's lunch and Canada's lunch, and the way that they sort of make sure that all of that investment flows into the U.S. That'll bring a whole series of challenges with it, including the need for high levels of capital for investment that may or may not be available, the need for a massive workforce that may or may not be available. But it's an interesting strategy to sort of think that this might be what's lying behind the tariffs themselves and the approach to kind of doing these things. If that's the case, then it suggests that as Mexico and Canada begin to think about how to engage with a pro-tariff administration in Washington, that they need to be thinking about the ways in which their own operations could support or enhance that reshoring and reinvestment of manufacturing, rather than a competition that's trying to take that manufacturing from a national perspective into any one of the three countries. And I think that this leads in some interesting directions. It does suggest that there is room for collaboration, and as the USMCA agreement, the free trade agreement between the three countries, gets renegotiated over over the course of the next year, I think there may be some wiggle room for all of the parties by focusing on those elements of the trade agreement where they can corroborate and anchor each other's efforts in this new investment environment. But having said that, I think that this particular tariff situation has really raised some issues on the Canadian side that need to be addressed. And this is stuff that Canada has talked about for 75 years and often done very little about it. So interestingly, the trade barriers between Canadian provinces are often higher than the barriers that would be imposed by the arrival of the Trump tariffs. So, construction workers from Ontario or companies from Ontario cannot do work in Quebec and vice versa. Beer and wine and spirits that are manufactured in one province can often not be sold in another province or cannot be sold easily in another province. And so one of the things that I think Canada will likely do over the course of the coming years is for the first time really begin to address those interprovincial trade barriers. This is something they've actually talked about for a couple of generations now, but nobody actually does anything about. And I think that this threat of the tariffs coming from the Trump administration might actually increase levels of interprovincial trade in Canada and increase the pressure to arrive at political solutions to help support that. The second thing that I think this changes in Canada is the appetite for new pipelines. So the oil and gas sector, centered in Alberta, but present in other places across the country as well, has essentially been locked into a relationship with a few specific buyers and partners in the United States because of opposition to the development of new pipelines in the Canadian context. As the concerns about climate change and global warming get trumped to some extent by concerns about the state of the economy and the ability to kind of show some degree of independence from the American market, I think we'll see increasing pressure from within Canada, from within the populace, to support the development of new pipelines. This will be a really interesting game changer in a number of ways. Canada currently sells oil to the US at a reduced rate. It's part of what keeps American gas prices low. If Canada begins to develop additional mechanisms to get their oil and gas to other markets, that may have the impact of raising gasoline prices in the United States. But it also could become part of the solution for Europe that's struggling to kind of understand what its energy options are in a post-Russia kind of environment. So as we impose sanctions on Russia, as Russia potentially goes into political decline over the next couple of decades, the availability of oil and gas and energy generally will be a huge issue in Europe, and Canada coming to the table with some new infrastructure to supply Europe could be an interesting way of spinning things. The final piece that I think we're really likely to see change in the Canadian context is something, again, that's been talked about for decades, generations, and this is the notion that the Canadian economy needs to reduce its reliance on the US economy. That somewhere between 70 and 80% of all Canadian exports go south of the border, and that industries are increasingly reliant on the American market as their sole source of income. And so one of the things that we talk about a lot is the notion of export diversification. But little happens on that front in many instances. And so I think that what we're likely to see emerge over the course of the next couple of years is a real emphasis on export diversification and the development of new export markets for Canadian products. This is something where we'll likely see Canada take advantage of the couple of dozen free trade agreements that it already has in place, but that we're also likely to see new agreements put in place and new initiatives to support those agreements, particularly with large trading partners like the European Union or the United Kingdom, which is in its own search for trading partners. And so I think we'll see a significant allocation of resources to support companies looking at export diversification in these interesting spaces moving forward. All of this suggests that whether tariffs happen or not, They've definitely stirred the pot. People are thinking in new directions in virtually every country that's part of these discussions. That includes Canada, that includes Mexico, it includes the US itself. And just this week, President Trump threatened tariffs against the European Union. So Europe, welcome to the discussion.